Founders Forum, Episode 12.
Open your mind to a new episode of the Founders Forum, the podcast championing a free economy, sound assets, and blockchain solutions. Each week, your hosts, entrepreneur Cole Snell and economist Bob Murphy, interview pioneers and free thinkers to help you develop into the architect of your future.
Hey, everybody. Welcome back to another episode of the Founders Forum. Today, Cole and I are going to be speaking with Stephan Livera, who hosts one of Bitcoin's leading podcasts, which is named the Stephan Livera podcast. And he's also the head of education at Swan Bitcoin. Stephan is also a partner in Bitcoiner Ventures. He contributes for various outlets and publications such as Bitcoin Magazine, the Mises Institute based in the US, as well as speaking at Bitcoin conferences internationally. And he's listed in the top 20 globally for Bitcoin Relevance on hive.one/Bitcoin. Previously, he worked as an Australian chartered accountant for Deloitte, Commonwealth Bank of Australia, and Macquarie Bank. Stephan grew up in Sydney, Australia, and studied commerce with accounting and finance majors at the University of New South Wales. So what Cole and I are mostly talking about is we have in mind, we know this is called the Founders Forum, that a lot of business owners listen to this podcast. And so we try to steer the conversation with you folks in mind to have Stephan explain some of the basics, what's Bitcoin, what's the Lightning Network, things like that. What should you as a business owner do if you've been toying with the idea of allowing for payments in certain cryptocurrencies? How important is that? And so we get into all those issues. So I think that's enough of an introduction. And with that, we will turn over the conversation. Hope you enjoy it. Well, Stephan, welcome to the Founders Forum podcast.
Thank you, Bob. As you know, I'm a big fan of your work, and nice to meet you, Cole.
Likewise, nice to meet you. I'm a big fan of both of your work, actually. So looks like I have my work cut out for me. Sorry, that had to happen.
Okay. Yeah. So, Stephan, so you're, as I mentioned before we started recording, you're all things Bitcoin. So a lot of our listeners are business owners who may be thinking about getting into, using blockchain technology as a way to augment their business. And so maybe a real basic one, because I know I've seen people who are like on the outskirts of these debates. And so if I'm a business owner, there's a big thing. There's Bitcoin, there's Bitcoin Cash, there's the Lightning Network. So if you're a business owner thinking, do I need to adapt so I can start accepting payment in these things? Can you just speak a little bit, not necessarily like recommending one or the other, but just kind of like what are the things that they should consider if they vaguely know what Bitcoin is, but they're really not experts on it?
Gotcha. So I would say there's probably two main angles for a business owner. One angle of it is if you are thinking like someone like Michael Saylor with MicroStrategy, this idea that you use it as part of your corporate treasury or for your business balance sheet, right? This idea that you hold a certain percentage of your balance sheet in Bitcoin. And that's kind of more like a long-term holding or hodling, as people may have heard the term. And then there's the other angle of it, which is the transactional component. And that's where, let's say, the Lightning Network, especially for smaller, lower value transactions, it makes a lot of sense where, let's say, you are doing commerce internationally. You want to make it easy to take payment or to make payment. So as an example, let's say you have employees in other countries, like in the Philippines, as an example. And then you want an easy way, instead of having to deal with wire payments and Swift code, IBAN, this thing, ultimate beneficial owner, et cetera, Bitcoin and Lightning dramatically smooth that process, especially in the age of internet commerce and international commerce. So I think those are probably the two short answers. But yeah, in terms of how we see it for us at Swan, we help business owners who want to use Bitcoin. And that typically means maybe they want to hold some on their business balance sheet, or in some cases, they want to do a Bitcoin benefit plan. So as an example, like a fringe benefit, they want to have, let's say they've got 10 staff and they want to do $100 of Bitcoin per month. And this is just like a little fringe benefit. They get paid out and the staff get this just as a little fringe benefit. So those are probably the main angles I would discuss for a business owner in this context.
Stephan, how important is it, in your opinion, for a business owner to hold Bitcoin on their balance sheet, or what would be the pitfall of not doing it?
So fundamentally, we've seen a lot of people who recently had questions being asked about whether they would be able to transact, right? So obviously with SVB, Silicon Valley Bank, Signature, and Silvergate, these banks were just about to shut down. Now, in this case, the US government entities basically stepped in and took control. But this kind of thing has happened before, right? There were bail-ins in Cyprus in 2013. There were bailouts in 2008. And so I think it makes total sense for businesses to hold at least a small percentage. And so this, in that way, still be able to transact, even if their access to the banking system is cut off or if the banking system has gone down. I just think it makes total sense. And we're starting to now see well-known investors and venture capital guys out there even saying this. I can't remember, I believe it was Naval or someone else who was saying, actually, yeah, it would be prudent to hold a small amount of Bitcoin so that way you are able to continue transacting and that you are not in a position where if you get cut off from your bank account, it's not stopping you from making payroll for your staff.
Bob, I'm going to make one really quick comment and I'll pass it over to you. I'm going to try and form this into a question. But today, or at least end of day yesterday, TD Bank, speaking of another bank, was the Toronto Dominion Bank was the most shorted bank to the tune of $3.5 billion or something in the world at end of day. I don't know where it's at today. I haven't looked at it yet this morning. And that was on the news that they were going to be buying a US regional bank. And so they got shorted. So that was obviously the message then is that, well, regional banks are risky. This big, strong, highly centralized Canadian bank, who often doesn't get into a lot of trouble, is putting this regional US bank on their balance sheet. Great, let's short the heck out of them. Now, what happens if TD Bank, and I'm kind of thinking out loud here, as well as I'm going to form this into a question. What do you think would happen to TD Bank from a short position or a long position if the rhetoric was they're not buying a US regional bank, and let's say the bank is worth $1 billion, they're buying $1 billion worth of Bitcoin. Do you think they'd still be the biggest short position in the world? Or do you think people would be long?
Well, I mean, of course, I'm a Bitcoin guy, so of course I'm going to be bullish on that kind of news. But I think it's just that we are seeing people who are jittery, right? And the government, and they're trying to do what they can to sort of say, oh no, we'll make it okay. We're just going to socialize the losses, right? And of course, as those, that seems to be the rhetoric nowadays, right? If there's a problem, oh, don't worry, we'll just socialize it. Right. And
that's
of course,
awesome. I've never heard it put that way. I love it.
all of us here are probably, I'm going to take a step. Well, I'm kind of familiar with Bob's political and free market views. And I'm assuming, Cole, you're sort of in a similar camp that
same.
We would see an issue with this constant bail-ins, bailouts, lender of last resort, capital gains tax laws, legal tender laws, endless bailouts and socialization of the costs. But very few people are talking about the hidden costs, because it's a very visible, quote unquote, benefit of a bailout or making the depositors whole, and a very hidden cost that arguably everyone pays.
Stephan, you said something a minute ago that I know to people in the Bitcoin world, is commonplace, but I just want to emphasize it, make sure the listeners caught it, because for a while, I subscribed to the notion, for example, 10 years or so ago, people are saying, hey, what should I do with my money? And as you know, Stephan and Cole, of course, there's a way to use whole life policies as a way to, bolster cash flows and store wealth in that aspect, especially if you're US or Canadian citizen, it's very advantageous. And then I say holding actual currency, and then holding gold or silver in case the currency collapses. And then I would add as a footnote to say, now, if you're technologically savvy and you're not afraid of it, you might consider holding some Bitcoin as well. And the purpose was in case the dollar crashes, which I didn't know when it was going to happen, but I thought at some point that may happen, in which case the Bitcoin serves as a hedge against, what the common person would call inflation, meaning rising consumer prices. But what you just said when Cole was asking why would the business hold it, it wasn't against currency risk, it was to hedge against banking risk. So it wasn't that your currency collapses and you want to have an asset that shoots up in value so that you don't get wiped out by higher prices. You were just saying, no, the ability to get at your money if that system goes. So it's just interesting that Bitcoin actually could possibly serve two different hedging roles. One is in case, your local currency goes down, maybe in certain scenarios, you would expect Bitcoin to respond the other way. But also, like you're saying, no, besides just being a possible store of value, Bitcoin by its very nature is designed so that you can transfer it to people without an intermediary. So again, I know this is standard stuff to the Bitcoin community, but for the outside listeners who maybe are just dabbling in this, I just wanted to stress that that's actually a completely separate answer you gave from what I was expecting you to say.
Right. And let me elaborate a little bit on that. I think, obviously, that's there also, right? You can hold Bitcoin without necessarily being price bullish on Bitcoin. That's that's kind of what we're getting at here. You can hold Bitcoin because it enables you to continue operating, right? Because this whole idea of Bitcoin, as anyone who's been around for Bitcoin for a while may remember, the rhetoric in the early days is this idea of be your own bank. You don't have to use the fiat financial system to transact. You can run a Bitcoin node, or even if you're not tech savvy enough to do that, you can just operate a Bitcoin wallet on your phone, or you can have a little hardware device like this cold card as an example, or Trezor or Ledger, something like this, and you can still transact. And I think in an age where people are being shut down, countries are getting shut off from the SWIFT network, the payment systems of the world are being weaponized, there's value to having a parallel system and being able to be your own bank. So I think it's two prongs, right? It's one is, I believe fiat currencies are devaluing over time. And I think that most of that is baked into the cake. If we look at what the level of government debt is around the world, we can sort of surmise, okay, maybe it's not going to collapse tomorrow, but over the medium to long term, they have to print. I just think that's the most likely scenario. And then secondly is just being able to still operate, even when the banking system is not being conducive to that.
And just to follow up, as Cole is well aware, being originally from up in Canada there, it's the thing about the payment systems being politicized. I mean, so I know there are people that wanted to support the Canadian truckers when they were protesting, and U.S. citizens who are just like using, I think it was PayPal, and that was all getting, their accounts were getting frozen just because they might have sent some money. In one case, it was a guy, it was like he didn't even send it to the truckers per se. It was like the people handing out water bottles to the truckers or something, like, you know what I mean? Like it was like one step removed even. And these people clearly weren't doing anything illegal. They were just literally handing out water to somebody, and they were getting, people's accounts were getting locked up while we penned investigations and blah, blah, blah. So it really is, and it was all, it wasn't necessarily illegal per se. Like it was it's a private company. They can set whatever policies they want and this kind of thing. But it just did show how, a lot of people, things that they would have thought inconceivable right. So, a year earlier, I don't know that I have access to my money.
Yeah, I think you're right. And I think just to add to what you were saying, as I understand some of the typical funding, I think it was Give, Send, Go, and maybe one other, or GoFundMe, right? And I think basically what happened is the Trudeau government was leveraging both an explicit power of saying you're not allowed to donate to these causes, and maybe there's also a little bit of an implicit in behind closed doors powers. They may leverage the banks that those entities are connected to and saying, hey, Bank ABC, if you continue to bank Give, Send, Go, and they continue to allow donations for the Canadian truckers, we're going to cut you off, or we're going to make your life hard. We're going to threaten your banking license. And that banking license for you is a ticket to play. If you don't have this banking license, it's game over. You cannot operate your business. And so it all comes back to this whole politicization of the banking system and the payments systems. And of course, Bitcoin enables all kinds of crowdfunding. There are examples. So a quick example I can give you is Geyser.fund. So this is an example of kind of like a Give, Send, Go or GoFundMe, but Bitcoin and Lightning enabled. So there will be people who go up there and they can put up their cause, whatever it is, and say, I'm doing Bitcoin education in Kenya. Do you want to donate to me? And you can just instantly donate, and boom, it's done in a non-custodial way, in a self-custodial way. So I think it just shows the power of this new system. But at the same time, I understand a lot of people are maybe a little hesitant because they're not familiar with this new system. But really, for a lot of people, seeing is believing. Once you've actually done a Bitcoin or a Lightning transaction and you've seen it yourself, it's like magic.
In Canada, there are essentially 5 banks, which are really just divisions of the Canadian Central Bank. So therefore, a division of the government. When Trudeau enacted the Emergencies Act, you're right, he basically told the government, therefore the central bank, therefore the big 5 banks, essentially there's only 5 banks in Canada, to freeze all anyone that had anything to do with like a trucker in Canada. There were distant family members' accounts frozen. We know people, friends, family, having Canadian relatives who accounts were frozen. So then there was this move towards Bitcoin as a solution. And there's a lot of people, me included, who were big fans of the move towards Bitcoin. It was challenged, though, because of the lack of people that really understood or had the ability to deal with wallets, essentially. And so that's where the whole thing kind of lost a lot of momentum. Transacting with PayPal or email money transfer is fairly straightforward, or Swift is fairly straightforward. But a lot of the trucker money, so to speak, evaporated, essentially, even though there was Bitcoin coming in and the people that understood how to send Bitcoin. But on the other end, a lot of, let's just say, the truckers didn't know how to receive it, or they didn't know how to warehouse it. So I guess, Stephan, do you see a solution moving forward for the friction around using wallets? Like, say, take a nano ledger, for example. Setting one up is frightening. There's a lot of uncertainty to it. Once if I lose my keys, or like the screen is like this big and you're trying to left, right, what's the solution to that? And do you think that if there's a solution to the cold wallet that will allow, say, business owners, the average business owner in North America, to adopt or say, utilize Bitcoin on a more day-to-day basis?
So fundamentally, I think there's no substitute for personal responsibility. A little bit, like, I just think there are certain elements that you will just have to learn. But I don't think it's insurmountable, right? It would be silly if I were to say, "Oh, Bob and Cole, nobody's going to take up driving cars. Think about, if I didn't change my oil, and if I didn't know how to do this gear stick and how to use a handbrake and drive and how do I deal with 2 pedals or 3 pedals with a manual car? That'll never work." Well, hang on. Most able-bodied adults can drive, right? And we just treat it like, hey, this is something you need to learn. You just, maybe when you're 16, your dad takes you to the local car park and he teaches you how to drive very slowly. I think it's going to be a similar kind of thing, that we can't expect, I understand, of course, people want to make it easy and they want it easy as possible, but there's a certain level to which you can't make it easier than that, or people lose sovereignty. And then we're sort of missing the point of all this to begin with. Now, it's true. I believe in the earlier days, and I still believe we are in the early days for what it's worth, even though here we are in 2023. Bitcoin started in January 2009. So what are we, 14 years into this? That said, I think it is still pretty easy if we're just talking about a phone Bitcoin wallet. I think when you start to involve, hardware devices and, more complicated security setups, okay, yes, it takes a little bit more work, a little bit more learning. That's part of what people like myself are doing, right? We're putting out educational content to try to help educate people to understand. But there is just a certain level to which we have to just accept that you're going to have to take personal responsibility. We're just going to have to learn. It's going to be like when people first learned how to use email, right? Maybe at the start, it was really complicated. And, I need to know how to type in this SMTP thing. And, this user password, how do I, over time, some of these aspects can be made easier. And I believe they will be. It's just a matter of time for people to become familiar with it. And there is a benefit to it also, because once you know how to use this stuff, you can now transact and receive Bitcoin frictionlessly around the world. And so there's an upfront cost, but there is a benefit to paying that cost.
Stephan,
appreciate your answer.
Yeah,
Great answer.
Very good. Let me just ask you to elaborate, because you said in response to Cole's question there that yes, we can make it easier up to a point, but there comes a point at which, I'm paraphrasing, but you said something like, if you make it easier than that, then people lose self-sovereignty.
Yeah.
And so I just want to make sure, because I think some listeners might just think you're sort of speaking in general, like, oh yeah, if you got some kids and you just do everything for them, they never grow up. But I mean, do you mean quite literally, like if you're like using another entity that's controlling the keys, or did you just mean more in the colloquial sense?
So let me elaborate a little bit.
Because some of our listeners may not understand this stuff. So go.
Yeah, totally. So let me explain it this way. If you go for the easiest Bitcoin experience, what you tend to be in is a custodial environment, meaning you are trusting somebody else with the keys for your Bitcoin. And of course, that's kind of anti the ethos of Bitcoin. Now, it's okay. It's okay for people to start with maybe it's okay for people to start in a place where they're not perfectly self-sovereign. Okay, fine, right? But it's like training wheels. You learn to ride the bike with training wheels, and then eventually you take the training wheels off. I think it's like that. And so to expand on the point you were asking me to elaborate there, Bob, I would say there are a lot of users who are just using Bitcoin in a custodial way. So they are using an exchange or a brokerage platform, or they have, let's say, a custodial Lightning wallet. They're not being sovereign in the sense of holding their own private keys. And of course, there is a trade-off with that. But the custodial user experience can be very slick and very easy, but it can also have downsides. So, for example, that entity could get regulated. That entity may be forced to do AML KYC. AML stands for anti-money laundering. And basically, it's when banks and financial services have to ask you for your passport or your driver's license and all this information. And so there is a trade-off there because the custodial platforms can make it very slick, but they sometimes will end up having to put more KYC, more identity requirements, more compliance burdens that you have to deal with as a user. And of course, there is a risk then that, let's say, the Canadian trucker example, Trudeau goes to custodial exchange providers and says, you may not provide Cole or Bob or Stephan with Bitcoin services. And we know you know that because you had to do KYC to KYC them. So there's a bit of a trade-off around that. And I understand it can look unprincipled that there are, let's say, we're trying to build this parallel system, but at the same time, there are centralized entities. But the way I sort of square that circle, as you will, is, like I said, it's a training wheels approach. Sometimes people have to start on the training wheels, and over time, they can graduate to the more self-sovereign, independent ways of doing things.
Okay. And also, too, if the reason like a medium-sized business owner is holding a decent amount in terms of market value of Bitcoin is for the reason you said, to be in case the banks go down or something, or there's a bank holiday to be able to pay their employees, it would be pretty stupid if you actually didn't have control of it and some other entity did, and then they went down too, and whatever the financial panic was.
Yeah. I'll give you an analogy. This is like maybe it's more into the libertarian political world, but the argument might be something like, I'm gonna have a gun, but I'm gonna leave it in the police office in their vault. And every time I need to use the gun, I need to go to ask them for permission to, it's kind of like, no, like you want to be independent. Well, you need to pay the cost of education and time and practice. And in a sense, whatever people's views are about guns and gun control, in some sense, you should treat Bitcoin like holding a gun. Like you should learn to practice and you should learn to use it safely and securely so that you are able to do it without losing your coins or without losing access to those coins. So I think it's a journey, but you have to start somewhere and then go on that journey.
One of the best examples or one of the good things that came out of FTX was a push toward a more sovereign relationship with one's Bitcoin, because people were freaked out that whichever hot wallet or custodial exchange that they were engaged with would follow suit. And so they were forcing themselves to learn how hardware wallets or cold wallets worked. And there was I saw a podcast on, or a YouTube video on, it seemed like a pretty reliable measurement of the number of people leaving exchanges to hold in cold wallets, which was a significant, I think it was like 30% or something. It was a significant right after FTX, which is a really good sign. And so to your point, just about people kind of like being accountable and driving a car. Well, yeah, it seemed like today if a car just, like a relatively after you, and I really appreciated your answer. I hadn't really thought about that. Yeah, like a hardware wallet seems pretty insignificant and inconsequential to learn versus driving a car if both were just to kind of appear out of, the universe simultaneously.
Yeah, and one thing I'll just add to your point is that there are cycles in this industry. And I know, Bob, you've been around a while. You've seen Mt. Gox went down in late 2013. And then in 2018, we saw Quadriga CX and Cryptopia went down. And of course, in the last year or two, we saw how many, you can't even count the number of failures we saw. It was FTX, BlockFi, Voyager, Vault, 3 Arrows Capital, I'm probably missing another 3 or 4, so each time we see this cycle play out, we see some people get burned, and then people realize, oh, wait a second, I can't just trust somebody else. The point is that I learn to be self-sovereign. And so to some extent, it's a cycle thing. Sometimes the people coming in, because for them, it's their first time, and they don't realize that they leave their coins on a platform somewhere instead of learning to take self-custody. So it's a process. And one other point I'll just add is that there are people trying to do this kind of in-between model. So as an example where you might have, they call it community custodial. The idea might be that there may be communities, let's say El Zonte, known as Bitcoin Beach in El Salvador, has a community where there are thousands of Lightning users, but there are maybe 5 or so community leaders who are holding a multi-signature. Again, kind of, I don't want to get into the technicals, but basically they're holding a lot of the coins kind of in custody for that community. And so there are ways that you can sort of have something in between, though, of course, my preferred option is for as many people to be self-sovereign because that makes the overall system more robust and it's more aligned with the vision of be your own bank.
Stephan, can I ask a somewhat more technical question or financially technical, not in terms of cryptography or anything? So I'm picturing, a medium-sized business owner, small to medium-sized business, here and they've got several employees, let's say, or perhaps up to a dozen. And they're like, yeah, that actually would make a lot of sense because I have been worried, like some of the customers of SVP, they weren't even like tech bros or whatever. They were just regular things and they had their payroll there and geez, it froze up and they're kind of panicked. And so, okay, yeah, this guy's saying I should hold whatever, 2 to 3 months of payroll in Bitcoin, let's say. But geez, it's so volatile, and if I'm not doing it as an inflation hedge, I'm really just doing it as a banking hedge risk. Or banking risk hedge, I should say. Can they buy calls or puts, I should say, like in case the Bitcoin price crashes, like so that they're not, in other words, they're not speculating on the Bitcoin price. They just want to have this amount of market value sitting there so they can pay their employees out of that if they need to. But on the other hand, if Bitcoin happens to go down 20% next month, can they hedge that away somehow? Like, are there enough derivatives in place or is that still not really developed enough?
So I think the short answer is yes, you could do that, but in order to achieve that, you may be giving up custody. So it's so I'll give you a quick example. There are platforms today that exist that are trying to provide stable value. And so a quick example of this is a project known as Stable Sats. And so this is actually a way to reflect fiat value using Bitcoin in what's known as Blink Wallet. It used to be called Bitcoin Beach Wallet. Now, disclosure, I'm an investor in the company behind this, Galloy Money, just so people are aware. But basically what they do is they give their users this ability to flip between Bitcoin and USD stable value. And how it works in the back end, to your point, is it's connecting through to an exchange and it's essentially going 1x short. So to give you an example, let's say this customer or this user has $100 of Bitcoin and they want to flip it $100 worth of Bitcoin, right? Which might be, I don't know, in today's, my mental math is not great, but let's say it's 0.003 or something like this, right? Basically, they can flip that and it's being held in stable value. Now, there is a trade-off with this. It is a custodial thing. But there are people out there providing this kind of product. So, for example, Collider, LN Markets are examples of people doing this kind of thing. Another way, there are individuals using things like stablecoins. I don't really use stablecoins myself, but I know that's something some individuals are using around the world or even businesses. So this way you can kind of self-custody it, but at the end of the day, really, who's holding the reserves for that? Well, it's probably a bank somewhere. It's a stablecoin issuer somewhere. So I think in practice, it just makes a lot more sense to just basically, I know it's not the nicest sounding answer, but take a little bit of Bitcoin price risk. I think that's like, if you want to be self-custodial, you want to be self-sovereign, I think chances are that you could just keep a small reserve in Bitcoin, use that for maybe one cycle of payroll, and hopefully by then you could have figured out your fiat banking issues and return back to the fiat banking operation mode, just to basically smooth over that initial, let's say, 2 to 4 weeks of banking trouble that you might have had. So I'd probably do it like that. But of course, depending on the customer's goals around how self-sovereign are they trying to be, how much price risk are they willing to handle in exchange for the freedom aspects.
In Canada, there is Bitcoin spot ETF. I think the ticker is QBTC.U.
Yep.
On the TSX, where, if I'm not mistaken, you can short it. So you can apply, a traditional trading strategy with puts and calls. And it's pretty unique because a Canadian could actually also, so for the listeners, a spot ETF, if you don't understand, so the idea is if you put $1,000 into this, then the custodian would then take that, or the administrator of the fund would take your $1,000 and buy $1,000 of fair market value Bitcoin. And so it's tied kind of 1-to-1, which is really quite unique. In the United States, they don't have this. Various companies have been trying to pull something off. They have ETF funds, Bitcoin, but they're non-spot. So there's some controversy. And then in Canada, you can also own this inside of something called a tax-free savings account, which in the United States would be the equivalent of like a Roth type product, which is a tax-free. So it's kind of a very unique, but to your point, you're in a kind of non-sovereign / custodial relationship with the exchange. And I think it would be a good opportunity for me to share, say, like how I personally buy Bitcoin, which is so big thing that Bob and I are fans of is using whole life insurance policies, properly designed to warehouse capital. So I would take my capital, let's say I'm a founder, so I might sell a business. I sell a business or a fractional piece of a business. I'll receive a check and I'll take that. And I'm kind of, for me, logically, for many, many years, it just made sense to kind of put that money into life insurance versus a bank. When you understand it, there's a lot of value. But then now I have an opportunity cost problem because now I have cash in a life insurance contract. I don't want it there. I want it doing something else for me. So then I leverage out of the life insurance contract and I then take that and I purchase my Bitcoin. And what it actually does naturally, because the life insurance contract pays historically since 1847, roughly hasn't missed a dividend. So say the dividend over that period of time is say probably on average about 7%, even in 2008, 2009, when the market took back 33, my life insurance contract still paid me 7. And so there's this natural smoothing effect because my Bitcoin is purchased from borrowing money from my life insurance contracts. That Bitcoin volatility is de-risked essentially by 7%. I'm kind of grossly, and Bob, maybe as an economist, you can like add to this a little bit because I'm just kind of like grossly kind of describing it. But it, for me, I feel a lot more confident because the volatility of the Bitcoin is really smoothed by about, say, 7%, because the life insurance contract, I can guarantee, is going to hit me with 7, but yet Bitcoin is doing this crazy roller coaster thing, in my life. So I thought it would be kind of an interesting way to kind of describe that kind of smoothing effect or that kind of arbitrage effect of, say, how I sleep at night owning Bitcoin, not worried about it going up and down. Does that connect, Bob? Like, does that, from an economic perspective, make sense?
Yeah, I mean, yeah, I think so. It's, again, not to, if people don't know enough about it, but yes, using the whole life insurance policies is like a warehouse place to store your capital, and then you're borrowing against it. So yes, that underlying value is going up. It's just like if you had a house and the real estate market kept going up and you borrowed against that to go do something else that you wanted to invest in. And so it's you're trying to get the best of both worlds there, where that underlying thing keeps chugging along. And then this other thing, hopefully it's a home run. And especially if it's a thing like you're saying with Bitcoin, where you're pretty sure 10 years from now, Bitcoin's going to be worth a lot more than it is right now. But you don't know whether 3 months from now that's going to be true or not. So especially for a thing like that, to have this more stable, dependable thing that is going to tick upwards, but at a modest pace. And then you can kind of go on this other thing that you're sure in the long run is going to be a home run.
Yeah. And it's so interesting, Stephan, because you kind of referred to the idea of being your own banker, and that's what kind of got me onto this idea is that, so there's this kind of idea, it's like a cash management system with using whole life insurance that's popularly, you may or may not have heard about it. It's called infinite banking. It's this like viral thing. And the idea, the moniker behind infinite banking is, being your own banker. And this is the product underneath this be your own banker from a life insurance perspective is a cash, mutually owned, dividend paying cash value whole life insurance chassis. Whereas you can take, and it's like 200 years old as analog, like literally to qualify for one of these things, you need a fax machine and like wedding signature still. Where on the other side of it, and this was like a huge realization for me, and in part, it's actually why we're sitting here today. I realized, okay, there's also this way to describe where you come from as be your own banker, but it has nothing to do with fax machines and wedding signatures. It's just the opposite. Right.
Yeah, I definitely see a lot of parallels there. I think you're right that there's a lot of parallels in the concept. And I think Bitcoin was forged in this kind of environment where it was sort of like, how much trust can I place in the banking system? And how much can I realistically opt out? Even if I don't like the fractional reserve banking system, my choices are so limited because, as I'm sure both of you gentlemen are aware, the narrow bank and Custodia Bank were both knocked back. So there's no real full reserve banking option available other than Bitcoin, right? That
It's
you can't,
crazy.
you just don't have another choice. That you are forced, and you can either choose one fractional reserve bank or another fiat fractional reserve bank. And people act as though that's freedom, when in reality, the only real freedom is to create your own parallel system. And the problem for anybody who even tried to opt out, let's say, okay, I didn't like the fiat fractional reserve banking system. I go to the bank before it collapses and I take out all my cash. I got all my US dollar cash and coins. Guess what? It's still devaluing over time. So
Right.
the factor, and people like all the Austrians, and I'm sure Bob, you're obviously highly familiar with these people, but people like Guido Hulsmann and Joseph Salerno, who've spoken about the problem of, let's say, legal tender laws that force us into this system. And what happens is they force us to treat the fractional token the same as what might have historically been a full reserve token. And so there's no escape. And that's, I think, where that's really the, let's say, the crucible from which Bitcoin was formed.
Would you be able to speak a little bit more? You said something so interesting. Could you speak a little bit more about, and it's interesting because we had Kate Long on this podcast maybe a week or so before this news dropped. Could you speak a little bit more about what Custodia Bank was not able to achieve, essentially? And because I think for the listener that this is actually quite fascinating.
Right. So my understanding of Caitlin Long's business is she was set up in Wyoming, and she was attempting to get a Federal Reserve master account. And as part of this bank application, she had to put in, okay, this is what we're going to do. We're going to hold $1.08 in reserves instead of this kind of fictional reserve banking system where, there's no real, it's all made up anyway. But she was actually trying to do something different. She was trying to say, let's have a full reserve bank. I'm going to hold more than 100% reserves. Customers can come and they would pay her. And now, I guess you could debate. You could argue that, okay, the Federal Reserve and the regulators, maybe they took umbrage with some other aspects of the business. Maybe they were trying to say, maybe that's excuses, right? Maybe they're trying to say, oh, we don't like your risk management. Oh, we don't like this other stable coin, AVITS coin that she was also going to do. And for that reason, you got rejected. Maybe the cynic in me is more towards the side of saying, look, I think they also understand that you can't realistically have a full reserve bank competing inside an otherwise fractional reserve system, because you may get this kind of vacuum effect, right? Maybe all these people are going to run to the full reserve because it's like a more truly full reserve bank. Possibly. I mean, I don't know for sure. And so I think, where are we left? Well, I think we just have to keep building the alternative. We have to build out the alternative. And I think it's interesting to me that we see some people in this age of CBDCs, central bank digital currencies. There's all this talk about how much control and surveillance that will happen. And we see these people who are, let's say, freedom fighters, and they're kind of arguing against CBDCs, rightly so. But then I think where they fall down is a lot of them don't point to Bitcoin. They don't say, hey, let's use this alternative. It's already a real working alternative. There are probably 50 million, 40 million people using Bitcoin today, right? Just, we could grow that number, right? All around the world, we could grow that number. We could build a real parallel alternative and not be so dependent on the fiat fractional reserve system.
Well, I'm glad you literally transitioned right into what I was going to ask you once I made sure that, Cole was done with his train of thought there. But can you just, so again, I know there's listeners, they hear these terms, and then it's been in the news and talked about so much that now they're afraid to ask because they don't want to look stupid. So what is a central bank digital currency? Is it the same thing as Bitcoin, except it's the Federal Reserve does it? Or, I mean, again, just for somebody who's intelligent but ignorant.
Yeah, sure, totally. I mean, I understand a lot of people have families and jobs and other hobbies than economics and free market stuff. So look, the short version of it is it would be a quote-unquote cryptocurrency kind of, but really like a permissioned system, and it would be operated by a central bank, by a government. And there are different forms. So some people have spoken about this idea of a retail CBDC, and in this kind of model, the commercial banks would be kind of cut into the system, and maybe the commercial banks would help them operate that system. Then there's the other style, I can't remember the exact term, but instead of the retail CBDC, it would be kind of wholesale. It would just be operated by, let's say, the Federal Reserve or by the Bank of Japan or, one of these big central banks. And so they are pushing it forward in a way because they're trying to say, oh, this is our new way to move into the future. This is our new way to do financial inclusion, and we could just centrally manage it. And of course, if you look at some of the papers by people like the IMF or the BIS, they will talk, and just for people who don't know, the IMF stands for the International Monetary Fund, the BIS stands for the Bank of International Settlements, and these are, let's say, these or kind of big, they're not at the government level, they're kind of at an international level, and they either regulate or quote unquote support the fiat fractional reserve system. And so what they're trying to do is they're trying to just say, well, wow, look, there's certain policy objectives that we could do with a CBDC. So for example, they could do some kind of demurrage, right? So they could say, hey, Bob and Cole, I'm going to issue you guys 100 CBDC bucks, but if you don't spend them within 6 months, they disappear. Right? This is the kind of thing that they could do. Another angle is, of course, they could say, oh, we're going to stop the drug, money laundering, terrorism, whatever. And because it's a central bank currency that I can see and I have full visibility, I can control that. Right? And it's the same kind of idea that people try to say, they try to point to, let's say, terrorism or, other objectionable things and say, look, because of these bad people, we need more control. So you need to give the government more control. And that's kind of the angle by which they can push some of these things forward. And so, it depends how wary you want to be of these things that are coming. So, we're seeing this stuff like 15-minute cities or the climate scammer people, basically the green scam, basically that they are going to try and leverage that and say, oh, look, Bob or Cole, you've been eating a lot of meat lately. You're not allowed to eat that much meat. You're only allowed to, buy bugs, or instead of buying nutritious food, you're forced without being able to have a say in what you buy and what you do with your money. And so I guess let me summarize. Central bank digital currencies are an operated currency by the central banks typically, and they will have an unprecedented level of ability to target interventions. They could give money to certain people. They could target that money in such a way where it's only allowed to be spent on certain things. It could be coded in such a way where it's literally destroyed, or they could implement things like negative interest rates, right? So it kind of all ties together with this idea of the war on cash. And we're seeing this around the world, right? Whether they are, let's say, banks are shutting down branches, they're shutting down ATMs, they're lowering the maximum denomination of the largest cash note that's available. They're trying to force people into an online system because that is how people who have a technocratic or bureaucratic view of the world, they can implement things that they want. So from their perspective, that's a great idea. Oh, wow, look how much control we can have, because they'll sell it like, oh, we're going to stop the terrorists, or we're going to stop the evil, bad people, because we can control things better with central bank digital currencies.
Just to follow up on that point about the negative interest rates, in case some of our listeners are thinking like, wow, this guy, he's really paranoid, or is it? This is mainstream stuff, folks, in case you haven't seen it. And Greg Mankiw, I think he was the chair of the Council of Economic Advisors for a stretch under George W. Bush, but, big textbook author, huge economist in the United States, very respectable, right-wing Republican guy. He had a column one time where he was explaining, so the ostensible problem was, in times of economic malaise, central banks sort of cut interest rates. Oh, but shoot, we can get into a liquidity trap if interest rates, nominal rates hit 0%. It's kind of hard to make it go negative because people could just hold cash. And so that's what Stephan's talking about. There's a lot of proposals among economists who are of the Keynesian mindset to say it's too bad people have the option to go to cash, because then we can't push interest rates to negative 3% if that's what, quote, we needed to do to fix the economy. And so Mankiw, one of his grad students, came up with the idea and said, well, what if the government just every month or whatever randomly picked a number between 0 and 9, and then if you had cash that the serial number ended with that number, it was no longer legal tender. And so that everybody knew, like on average, 10% of their cash every month would disappear. So that would make people go spend. And Mankiw, he wasn't saying, no, that would be insane. He was saying, what a clever idea. Maybe there were some logistical problems or there'd be constitutional issues, blah, blah, blah. But so for people to realize that this, and again, this is not some crank guy on a Reddit subforum or something. This was one of the biggest economists in the United States talking about this matter of factly, like the idea, like how can we make the money so undesirable that people just want to get rid of it because that's the only way to fix it. I mean, and again, just kind of showing the flaws, I would say, and I know Stephan and Cole agree with like the current Keynesian orthodoxy in terms of economics. But anyway, that I'm just trying to make sure people realize, Stephan, the stuff you've been talking about there is not kooky. You got to go on a 2-hour internet search to find these radical paranoid fantasies. Like this is real stuff.
And as I was mentioning, this is literally, you can look in like BIS and IMF papers and they write about these things, right? It's like that infamous quote from A Big Short, right? Like they're not, they're bragging, right? Some of them are like, they are sort of talking about what kinds of controls they could put in. And maybe they might give lip service to this idea of maybe some amount of privacy should be there in the system. But the reality of it is that if you want to create a parallel system, I think Bitcoin is an irreplaceable part of that, right? And even if you're coming from an infinite banking context in order to be able to do payouts, as an example, right? To be able to take money in and take money out, like to have a system that's not government controlled, I think Bitcoin is so important to anyone who is concerned about these aspects of freedom. And, after the last few years, it was funny because I remember in 2020, people were saying, there might be this vaccine, but it won't be required for travel. And guess what? Even today, as we speak today in April 2023, there are still some countries, the US being one of them, that requires a vaccine before a non-citizen is allowed to enter the country. And so, this would have been a conspiracy theory from 2020. And so I think the last 3 or 4 years should have woken up a lot of people. And I think these are the people who should be considering Bitcoin more seriously and in taking this idea of be your own bank seriously.
When I was in my early 20s, I was at a dinner party and a friend of my dad's handed an envelope over to my dad. My dad had done some work for his friend. And in that envelope was one purple, this was in Canada. I'm not sure if it applies in the US, but in that envelope was one purple $1,000 bill. The guy owed my dad, and he went out and got a $1,000 bill, just thinking, well, it would be easier for him to carry around this $1,000 bill, probably harder to spend it. They probably want to break it, has more sentimental value. Today, and I remember thinking at the time, like, hey, I want to go out and get a whole bunch of these purple bills. This is really cool. I want to have a stack of them. Well, to your point, I mean, today, you couldn't get a $1,000 bill. Well, you could probably buy one potentially on eBay, but it would cost you $1,200 because if it's more like a collector's item, if they're even in circulation. But to your point, they're making cash fiat so much more difficult to just deal with. It's almost as like cumbersome as gold in the sense that all that will be left are like $1 bills. And for you to be able to move about your life, you're going to have a hockey duffel bag full of cash to go in and buy your groceries if you kind of want to stay unbanked, or you kind of like, because technically living in fiat, if you could be technically a version of unbanked, which is virtually impossible to do more so all the time.
Yeah. And I'll just add something to that also. I have some friends. Well, I have one friend in Lebanon and I have another friend who was visiting him. And they were telling me about what it's like in Lebanon right now. So because the currency has really gone so low, the biggest cash denomination note in US dollar terms at the time was something like $1.30. So you can imagine if you're going out to dinner and you've got to have all these notes. So I'm just trying to make the point here that for many listeners, they're probably in the Western world and this hasn't happened yet. But if you just look around the world, there are people already having to deal with this kind of thing right now, today. So it's not so crazy to think that it can eventually get there. Now, it's not going to happen tomorrow. I'm not like crazy, everything's collapsing tomorrow. But it's more just like pay attention to, in the medium and long term, where things are going. Look at the government debt situation. Look at where things are going and what is the likely outcome? Well, the likely outcome is they're going to have to print, right? And if that's the likely outcome, what are we doing today to be ready for that, right? It's just like insurance, right? You don't go and buy the insurance after your house is burnt down. You won't be able to buy it then. You need to buy the insurance before your house burns down. And I think holding some Bitcoin and thinking about these concepts in advance is so important.
Well, I think that's a great note to end on. So thank you, our guest this episode has been Stephan Livera. Stephan, thanks for your time.
Thanks, Bob, and thanks, Cole. Thank you. I enjoyed chatting with you guys.
Likewise. Thanks, Stephan. That was great.
This concludes another episode of the Founders Forum. The information provided is for educational purposes and does not constitute financial advice. Consult with qualified professionals before making any financial or investment decisions. For more information on the hosts and for previous episodes, visit foundersforum.io. Thanks for listening.